Headlines are a-talkin' and buyers are a-walkin'. It is sell-off city here on Wall Street, and also physically on Wall Street is our friend, Stephen Guilfoyle of Sarge 986. Stephen, welcome.
Thank you. Thank you for having me.
Well, we intended on focusing on Fed speakers this week, along with tomorrow's CPI data and earnings, but now headlines have sent market jitters into the market, and we're not bouncing back as fast as we have previously have. So is this dip here to stay?
Well, we're only off about 1%. And the threat of global thermonuclear warfare is it's kind of a big deal. North Korea has threatened to go after Guam. Our president doesn't look like he wants to back down anytime soon. The generals seem pretty stern in the advice or the way they're portraying themselves to the media. This probably will not go away soon. It's probably going to be with us at least through the end of August. I think North Korea has some military exercises they have to get through. Let's see where they go with this. We all know their leader is probably much more unstable than our leader. So there really is a wild card here, and people are going to price off risk. You're seeing oil come in, you're seeing stocks come in, you're seeing the safe haven assets, you're seeing gold, treasuries. Even the U.S. dollar saw some support, which it had been coming in all this time. Now all of a sudden here in the mid-93s, it's a sticking point.
Well, breaking records was starting to kind of sound like a broken record. So is this weirdly healthy for the market?
Yes, I think so. I mean, not that I know everything, not that I have a crystal ball, but I've gotten active today, mostly on the buy side. I've taken a couple of profits. I got out of half of my NVIDIA position, but I sold puts $20 lower going into tonight's earnings. And I got more than $1 for those puts, even though they expire tomorrow. So maybe somebody knows something I don't know, but I thought that was a pretty good deal. I've also initiated longs in some stocks I've been out of for a few weeks, such as Amazon, Google, Activision. So I'm not really afraid. I mean, can I lose money? Sure. Am I afraid to lose money? No. I mean, that's part of the game. And when you see a discount, you have to go after it. This is a 1% discount across the board, but in the tech sector, it's more like a 2% discount. When it's down 5%, will I panic? No, I'll probably buy more.
Okay, well, let's go back to commodities like you mentioned, because we have seen some bigger moves there amid OPEC gone wild and, like you said, the geopolitical tensions. But we'll get a better idea of hedging in this space with tomorrow's COT report. So what have you been noticing, and have you been trading with that?
Well, I am long some oil names. They've come in. They're about where I want to buy some more, but I've already spent enough on oil. It's really the one bloody spot on my portfolio for the year. So I don't know how much more aggressive I want to get. But there's probably going to be at least a little bit of a lack of hedging going forward, because we're seeing 6 months down the road, the futures are priced right about where the spot price is today. That was in the journal, I think, yesterday or the day before. And that's very interesting, because that's how these guys hedge their bets. They'll store a barrel of oil, and they'll sell the futures contract for a little bit of a premium down the road. Now they can't do that. So if oil comes in as it's doing today, I think it's trading in the 48s. If it hits 44, 45, I think you'll probably see a bid come in to the market there. I think you'll probably see the boys from the Permian probably cut back. We've already seen a drop in the rig counts last week. I think you'll see where they're less aggressive. If it heads into the 50s, all bets are off.
Okay. Well, yeah, we're definitely not seeing 53 like you mentioned last time.
No, it's 52 now. The levels dropped $1.
Okay. We got Sarge's levels. Well, one more question, because I know we got to talk about the Fed with you here. Today, William Dudley mentioned that he expects inflation to continue to increase. We have CPI tomorrow. Do you agree with him?
I think it's a little bit tougher than that. I'm disappointed with the PPI. I think the CPI, we're looking for something like 1.8% at the headline, coming off of 1.6%. To me, that's really disappointing, being we did see much stronger energy prices for the month of July. I think we really want to see the ball roll a little further than that. We want to get not just to 2%, but 2.3 to 2.4%. So I think we're a long way off. Next week you have retail sales and you have industrial production. Those two numbers will matter just as much as anything else you see for the rest of the month, unless something bad happens with North Korea.
All right. Well, Stephen, so glad to have you here. Nothing bad happens when Stephen Guilfoyle is here. He's wearing green. He's our lucky guy.
Yeah, I'm lucky.
All right. Follow Sarge on Twitter, Sarge986. We will tweet with him later for sure, and you'll catch our video there.